Hey, Tim Sykes here, and I want to go over a very useful pattern, basically with a stock that's about to break out. But first, I got to talk about this conference that is just over 2 months away now, the Trader and Investor Summit. This is the 10th annual conference. Pretty crazy that we've been doing this for so long, and we're so excited. This is going to be our biggest event ever. You have basically just a few days to save 72% off with this early bird pricing. It is a 3-day conference where we'll have 2 days of studying and 1 day of live trading. I just released this to my most dedicated students 36, 48 hours ago, and we're already 75% sold out. So pretty awesome. I'm really just glad that a lot of you guys understand the value of learning in person and meeting everybody. It's not just me, Tim Grattani, Michael Good, Mark Crook, Stephen Duck, Superman, Triforce Trader. So many millionaire traders will be there and speaking and trading. So very excited. I'll post the link just under this video. But in this video lesson, I want to talk about this stock PIXY that is within striking distance of a breakout. This is a pattern that has been working well for me. You might remember a few days ago, AVEO. Well, I guess you can't really see on this chart, but this was a breakout right in here. And my whole thought was that, it was going to break this key level of 230. I've been traveling the past few days. I have some amazing new charities to tell you about, and I was teaching some students in Europe. But long story short, this was a stock that was breaking out, or looked like it was close to breaking out here around 230-ish. And even though it looks like, okay, this is a successful breakout from 225 to 325, it was actually a delayed morning spike. I didn't make that much, even though I was in the right place. I had a good video lesson. Where was it? A stock within striking distance of its highs. So I was buying this stock where I thought that it could break 230, maybe 240, and keep going. It did, and it went all the way up to 325. So this was a nice little 3-day breakout. PIXY is the same kind of thing right now. And you'll see that these patterns happen again and again and again. And I don't know if it's going to necessarily break out. Like this looks like 1020-ish has been resistance a few times. And it broke that after hours is up to 1039. And the question is, can it get back to the 11s? I don't care if it breaks 11 or 11 and a half. I'm happy if it gets there. I'm long from roughly 10, 12, so I'm up like 20 cents a share. But the cool thing is that this is very similar to AVEO. Let me just pull that up again. This was just a few days ago. I posted this video lesson July 5th. So you'll see that the best patterns repeat again and again and again. And AVO, as I said, I was going long in the 220s. I got out around 230, made like 2 or 3 cents a share. Totally kind of bungled it, considering that it went up another dollar a share. But because of that trade, because of that chart pattern, I take lessons away from it. If you ever screw up on a trade, or you don't make a lot, or you lose a little, take lessons from it and see if that pattern and that lesson can be applied again. And here we are just a little over a week ago. I mean, look at this. 230 was resistance. Once, twice, 3 times, 4 times. And on the 5th time, AVEO did break it. And then the question was, could it get to 240? And sure enough, it did. It went all the way to 325. Look at this on PIXY. 1 resistance at like 1020. 2. This one only got to 10. 3, 4. And this is number 5, and it looks like this is the time to break it. Exact same thing on the 5th try, where it's closing high. And again, you never know if this is definitely going to break out. All you can try to do is put yourself in a good spot. That's why I titled this A Stock Within Striking Distance of Its Highs on AVEO. And even though I didn't profit that much, this trade paved the way for this trade. And just because AVEO worked out does not mean that PIXY will work out. I mean, they're totally different stocks, totally different industries. But at the same time, they're very similar price action, where you have like this, even though it's stopped a few times at 230, you have this uptrending. You have this ascending triangle where you can see here the low was 2, then 205, then 215, then 220, then 220. So you have this nice little uptrend. And then the question is, can it break out or not? And in this case, AVO, it did break out $1 a share higher. As I've said, and I don't want anybody to be confused. Don't be like, oh, Tim Sykes said he was in AVEO and then it spiked $1 and he nailed it. No, I was in AVEO. I did think that it could break out, but I did not nail it. I'm actually a better teacher than I am trader. But the cool thing is, PIXY, I get a second chance. And I think that there is a good potential for this to, break this 220, or not 220, sorry, 1020, 1030-ish level and possibly retest these highs in the mid 11s. Mostly because this is not just a random play. This is also a recent IPO. So there's multiple trends and multiple patterns here. So this is the IPO on PIXY. It's gone up nicely. I mean, they have kind of this cool little business where it's like on-demand shift workers, so you can compare them to Uber, even though, the on-demand economy, I mean, it's a tough thing. Not every company is going to be Uber. There's only one Uber. But at the same time, this also has that ascending triangle kind of pattern where it's forming higher lows. And, it's up after hours. We're heading into a Friday. Friday is the day that the most speculative stocks run. And, it's worth a shot. That's the key to trading. You never know 100%, but you can see here every low is higher. The low, this is a 2-day chart. The low was 9, then 915-ish, then 975, then 980, then 990, then like 1010. So you have this clear uptrend, and the question is, can it really break this 1025, 1050 level? 1050 really was resistance on Thursday. So I'll be watching, or 1047 was the high, but there was a wall of sellers at 1050. So the question is, can it really run if it breaks 1050? Then it could, potentially, touch 11. I don't know how far it can run then. All I care about is that I was in spotting this trend ahead of time, just like AVEO. You don't necessarily want to buy right at the breakout level. Like I don't know if I would really want to buy this right at 1050, because it very well could, test 1050 and then come back down. And if you buy it right at that breakout level, you might be buying into a brick wall of sellers. And then if 1050 fails, I mean, it could come down to 10 very quickly. So when I'm buying it, in the low 10s, I understand that I'm buying it a little off its highs, but it's because I don't want to buy it right at the breakout level. A lot of newbies just want to buy the breakout because, that's what they're taught. They're like, oh, buy the breakout. Once you start getting experience, you start saying, okay, let me try to pick better spots. Where I'm in at 1012, if it touches 1050 and it fails, guess what? I'll be out in the 1040s or the 1030s. No different than AVEO, where I think my average was like 224. If it had failed at 230, which it did at first, I was out at like 228, 229, and I still made 3 or 4 cents a share. As it turned out, I played it too safe. It went up another $1 a share. But this is what I like seeing. I like seeing the trend, the overall trend, and seeing, where I can try to enter and exit. I was actually trying to buy this in here on the dip in the high 9s when it was fading, because I thought that was better, risk reward, where if it got up to 10.50, I mean, that's like 70, 80 cents a share of upside, but I couldn't get executed. It spiked too quickly. And then the question was, could it even really hold $10 a share? $10 a share is somewhat important too, because you can see here a few times in a row, on Tuesday and Wednesday, it tried to get to 10 and it failed. So the question was, could it even hold 10? So maybe it wasn't that bad to miss it at 980. I'm looking for all these key signals. I'm looking for signs of whether it can really break out. And, I don't know for sure. That's why I'm making this video lesson pre-market, just so you can understand. I want to watch very carefully how it acts at 1050, which is Thursday's high, if it can get there. If it can break 1050, then it can really spike and maybe retest the 11s. If not, it could easily top at 1050 and I'll exit in the 1040s. Maybe it doesn't even get to 1050. Maybe it opens at 10 and it opens red on the day, and then I'm out and I cut losses quickly. So I'm not saying that this has to go up. I want you to start thinking in terms of what could happen and striking distance. Because if it does break 1050, might spike from 1050 to 11 all in 1 minute. That's why I'm making this video now. I want you to be prepared ahead of time. It's very difficult sometimes to trade stocks near the market open when they're spiking. Let me show you Thursday's morning spike. You see here, I mean, okay, it went down a little bit, but right here at like 9:50 a.m., I mean, it goes from 9:25 to 9:75 in like 2 minutes. So this thing, and then another like 10 or 15 minutes, it goes up another 75 cents. So from basically 9:50 a.m. to like 10:10 a.m., 20 minutes, it goes up $1 a share. So you have to be quick, and you don't want to chase at a stock at a play like 1025 because now it's gone up so much off its lows. It has to consolidate, even though it did make another attempt. It's made a few attempts now at 1025, 1050-ish. So this is the key level to watch. But understand that this kind of a morning spike can happen, not necessarily at 9:50 a.m., but more likely on Fridays, especially because Fridays are the best day for speculative plays and short squeezes and morning spikes. This kind of a 50-cent spike can happen right at the open, or maybe even $1 spike as shorts get scared. Because I bought, a lot of people like to bet against me because they think that these patterns are BS. You can bet against me any day you want. Okay, I encourage you to learn your own patterns. Don't follow me. Don't bet against me. Just see what patterns work more often than not. AVEO, I mean, I know that there were a ton of shorts here in the low twos because it's not a fundamentally solid company. And I know some shorts are still holding and they're down, 50% on their positions. And they're so stubborn in the thinking that, this has to be worthless, that this has to go down. Short sellers, I don't even understand them anymore. I've made millions shorting, but if I'm down like 10 or 20% on my position, I cut losses. Some shorts are down 50, 60, 70% on their shorts, and they just keep holding, and some of them keep adding. That's a recipe for disaster. And it's definitely a recipe for heartburn. So AVEO was a beautiful breakout with a short squeeze. Can PIXY do it? I don't know. All I know is that it's within striking distance. It has a tendency to morning spike. It's a Friday. And all of that adds up to a good value. Let me just do a quick SSS for a second. In case you don't know, this is on Profitly/SSS. If you've seen my trader checklist guide, you can basically numerically grade the value of a play. And let me just compare AVEO at 230 and Pixie at 1030, just so you can get an idea of how I grade this. This is all on a scale of 1 to 10 or 1 to 20, and it goes up to, if you add it all up, to 100. You want the total value of the potential trade to add up to over 70, ideally. Let's start with AVEO. Let's go back in time. Even though I know that this was a great trade, and this actually turned out to be a 50% winner from the breakout, let's just see what I was seeing back when I was buying it right in here. It had not broken out in the 220s when I bought, mind you. Okay, so it was not a definitive breakout. It easily could have topped at 230 or 240, but I thought that there was a good chance and good odds of a breakout, or at least an attempted breakout. So the pattern and price, I'm not going to value it a 20 out of 20 because the breakout hadn't occurred. It was a speculative idea. I'll say 13 out of 20. Risk reward. This is where it gets interesting because buying it before the key breakout level, actually it was really at 224 when I bought it. Buying it before the breakout level reduces my risk, but it also reduces my reward because then I'm not sure, if I'm really going to hold. If I buy a stock that's already broken out, I have more confidence. With this kind of a play, buying before the official breakout, I don't have as much confidence. It's kind of a safer play. And even if the breakout does happen, I'm not sure if it'll be a fake out breakout. So it's just like a safer version. Risk reward, I'll give it a 14 out of 20. Ease of entry and exit, I mean, it's easy to get out of both of them. Or on AVEO, it's very easy. I would actually rank this one a little lower because the spread can sometimes get nasty. Past performance history of spiking. Let's take a look. Oops, I have too many Windows open. Here is AVEO's chart. I mean, it's a big spiker, and it's a big recent spiker, so that's usually pretty good. PIXY, same kind of thing. Both of them have spiked recently. So they're both going to be 10s out of 10s. What time of day is it? So I was buying AVO into the close, looking for a morning spike the next day. The only problem was my personal schedule. AVEO, I was actually traveling that day. So it had to be a morning spike right at the open. Didn't get it, so I got out. It turned out that it was like a 10 a.m. spike. So it was a delayed morning spike, which sometimes happens. So for me, this is a 13 out of 20, only because of personal schedule. Pixie, I'm not, I'm traveling. I mean, I'm overseas, but I'm not traveling the very hour of the market open. So I can give this one time if it is going to spike at 9:30 or 9:45 or 10 a.m. Eastern. So this one I like better. Reason catalyst, again, this is just a short squeeze. It's not great to try to guess short squeezes. So I'll say 7 for both of them. Market environment is primed for both of these. Now I specifically left these two blank because I want to go into them. So pattern and price, AVO has already happened, mind you. This was a 77 out of 100. This should have been 100 out of 100. As it turned out, this was a great 50% winner over 3 days. PIXY, the pattern and price, very similar kind of potential breakout as AVEO. The question is the breakout real or is it going to top again? I don't know. I'm going to value it in exact 13 out of 13. It's the exact same thing as AVEO. It's scary. Risk reward. So here's where this one gets interesting because again, with Pixie, I don't know if it's necessarily going to break, 1050. Remember on AVEO, the resistance was 230-ish. I don't know if it's going to break, Thursday's highs of 1050. If it does, it might be very fast. And again, it could very well just be a fake out breakout. But I'm in at 1012. So even if it, opens at 1039 or 1032 or goes to 1050 or goes to 11, I'm in the green. Whether I make 20 cents, 40 cents, 80 cents, doesn't matter to me. There is a chance, when you hold a stock overnight, there could be negative news. It could gap down. And I'll cut losses quickly because then this breakout will have failed. But conservatively, I'll say that there's a pretty good chance that it can touch 11. I don't know if it can necessarily get to 1164, but I think that if it breaks 1050, it can go to 11. So that's roughly 80, 90 cents a share of upside from my buy. If it somehow breaks below or, comes down to 10, meaning that it's down 10, 20, 30 cents a share on the day, it's red, this little bounce attempt has failed, then I'm out, okay? And I lose 10 to 15 cents a share. So if there's 80 cents a share of upside, conservatively, and probably if I really wanted to even be more conservative, let's say it fails at 1050 again, okay? And I have to sell at 1040. So there's 30 cents of upside. 30 to 90 cents of upside versus downside risk of like 10 to 15 cents. My risk reward is either like 3 to 1, 4 to 1, 5 to 1, something where it's very good. And you can see here, this stock also has a history of spiking on breakouts. You can see here the previous high was like 950 and it broke out, went to like 1050, comes back down to the nines, the high nines, and then the next morning it goes to 1160. So we very well might see something like this where it spikes up $1.50 a share in the first hour and then crashes. That's fine. I'm not, trying to guess what this is going to close at on Friday. I'm trying to guess what it's going to open at. They're two very different scenarios. A lot of you guys message me. You're like, Tim, how did you make money? The stock finished down on the day. It doesn't matter what the stock finishes at. It's what your time frame is. And my time frame is purely isolated on Friday morning. What will it do Friday morning? Will it gap down and I'll have to take a loss? Will it break 1050 and go to 11 and I'll take a solid gain? Or will it, double top or, quadruple top at 1050-ish and I'll have to take a small gain? Any of those options are on the table. But long story short, the risk reward is solid, whether it's 3 to 1, 4 to 1, 5 to 1, 6 to 1. So I'll vote it a 17 out of 20. So I think this is actually rated higher than AVEO, although AVEO took 3 days to really spike too. So I'm not going to be in PIXY, all day Friday. Understand that I'm specifically aiming for a quick breakout either at 9:30 a.m., 9:45 a.m., maybe 10 a.m. Eastern. I'll give it a half hour. That's about it. This is how you trade like a sniper, and this is how you plan trades, especially while traveling. So if you understand that in this whole video lesson, please do leave a comment underneath. I'll see you guys in the chat room, and please do take advantage of this sale on my upcoming conference 2 months from now. It will be sold out next week, so you got to act fast if you want to trade live with me. I'd love to meet you in person. Thank you.